The moment of discovery that she did everything right, she paid her premium every month. She asked for full coverage because she wanted to be protected. When her car was totaled in an accident, she assumed the insurance company would make her whole. They did not, and the reason lies in two words she thought she understood: full coverage. The term full coverage does not appear in any insurance policy. It is a marketing phrase, an illusion sold by agents and repeated by customers who don't know what they're actually buying. And this illusion costs thousands of people their financial stability every single day. Full coverage is a lie. Here's what it actually means. The invention of full coverage. The term full coverage was never a legal definition. It was a sales tool, a simple, reassuring phrase that made a complex product feel simple. When a customer calls and says, "I want full coverage," the agent knows exactly what they mean. I want to feel completely protected, and I don't want to think about the details. In reality, every auto insurance policy is a menu of options. State laws require only one thing: liability insurance coverage for damage you cause to others. Everything beyond that protection for your own vehicle is optional, and the term full coverage typically means you've checked just two of those optional boxes. When most people say full coverage, they mean they have both collision and comprehensive. That's it, not rental reimbursement, not gap insurance, not roadside assistance, not enhanced medical payments. Just two coverages that, combined, protect your vehicle from two specific types of events. And even then, they protect it in a very specific and often misunderstood way. Collision vs. comprehensive, the real meaning. Let's end the confusion forever. Collision coverage pays for damage to your car resulting from a collision with another vehicle or object. You hit a tree, you hit a guardrail, another driver hits you, and they're uninsured or underinsured. Collision coverage response. It is the most straightforward of the two. Comprehensive coverage pays for damage to your car from almost everything except collision. The name is misleading. It is not comprehensive in the sense of covering everything. It covers specific acts of God and non-collision events: theft of your vehicle, vandalism, fire, hail, or flood damage, falling objects, tree branches, debris, animal strikes, hitting a deer, riot, or civil disturbance. Comprehensive is not a warranty. It does not cover mechanical breakdown. It does not cover your laptop stolen from the back seat. It covers specific external events, and both collision and comprehensive share a critical feature that most people discover only after a claim: the depreciation trap. Here is the lie within the lie. Collision and comprehensive do not pay to replace your car. They pay the actual cash value of your car at the moment of loss. And actual cash value is not what you paid. It is not what a replacement would cost new. It is the depreciated market value of your vehicle minus your deductible. This is the depreciation trap. New cars lose 20 to 30% of their value the moment you drive them off the lot. In the first year, depreciation averages another 15 to 20%. If you finance your vehicle, your loan balance decreases much more slowly than your car's value. For the first 2 to 3 years of ownership, you are almost certainly upside down owing more than the car is worth. Our case study purchased her car 18 months ago for $34,000. She financed $32,000. After 18 months of payments, her loan balance is $28,500. But her car's actual cash value at the time of the accident is only $23,100. She owes $5,400 more than the car is worth. Her full coverage policy paid $22,600. She still owes $28,500. She has no car, no way to get to work, and a $5,900 debt she must pay immediately. This is not full coverage. This is a financial disaster disguised as protection. The missing piece is what full coverage leaves out. But if collision and comprehensive aren't enough, what is? The answer depends on your situation. But there are for additional coverages that transform a basic policy into genuine protection. Coverage 1, gap insurance. Gap insurance pays the difference between your car's actual cash value and your loan balance. If you finance a vehicle and put less than 20% down, or if you lease, gap insurance is not optional, it is essential. It costs a fraction of what the coverage provides. Without it, you are gambling that your car won't be totaled while you're upside down. Coverage 2, rental reimbursement. If your car is in the shop for 2 weeks after an accident, how do you get to work? Rental reimbursement covers the cost of a replacement vehicle while yours is being repaired. It typically costs $20, $40 per year for coverage that can save you hundreds in a single claim. Coverage 3, roadside assistance, a flat tire, a dead battery, a lockout. Roadside assistance covers the cost of help when you need it most. It's often cheaper than standalone motor club memberships and ensures you're never stranded. Coverage 4, medical payments or personal injury protection. Your health insurance covers medical bills, but what about your deductible? What about lost wages? PIP and MedPay cover medical expenses for you and your passengers regardless of fault, often with no deductible. In some states, PIP is required. In others, it's an overlooked add-on that can prevent financial ruin after an accident. Now this is closer to what people imagine when they say full coverage. Protection for your vehicle's value. Protection for your mobility. Protection for your physical and financial well-being. But most agents won't offer these unless you ask. The DECODER Understanding Your Policy. Your insurance policy is a legal contract. Learning to read it is the single most important financial skill you can develop. Here's what to look for. Section A, liability. This pays for damage you cause to others. It is required by law. The numbers you see like 100 300ths. 100 represent thousands of dollars of coverage. 100. 300 100ths means $100,000 per person for bodily injury, $300,000 per accident for bodily injury, and $100,000 for property damage. Section B, medical payments or personal injury protection. This pays for your medical expenses. If it's not listed, you don't have it. Section C, uninsured, underinsured motorist. This pays if you're hit by someone with no insurance or insufficient insurance. In many states, you can reject this coverage in writing. If you did, you may be dangerously exposed. Section D, damage to your auto. This is where collision and comprehensive live. Look for 2 separate line items, each with its own deductible. If you see only one, you have only one. Endorsements. These are the add-ons: gap insurance, rental reimbursement, roadside assistance. If they're not listed, you don't have them, and you cannot add them after a claim. The action plan. Building real protection. Here is your protocol for building genuine protection, not the illusion of it. Step 1. Know your numbers. What is your car worth today? What is your loan balance? If you're upside down, you need gap insurance immediately. Step 2, ask the right questions. When you speak to your agent, do not say, "I want full coverage." Say, "What are my liability limits, and are they adequate for my assets? Do I have both collision and comprehensive? What are my deductibles? Do I have gap insurance? Do I have rental reimbursement? Do I have roadside assistance? Do I have uninsured motorist coverage? What is not covered that I might assume is covered?" Step 3, adjust your deductibles. Raising your deductible from $500 to $1,000 can lower your premium significantly. but only if you have the cash on hand to pay that deductible if something happens. The deductible is not a fee, it's your share of the risk. Step 4. Review annually. Your car depreciates. Your loan balance changes. Your life circumstances shift. A policy that made sense 2 years ago may leave you dangerously exposed today. Schedule a yearly policy review with your agent and read the declarations page yourself. The truth sets you free. Full coverage is a lie, but understanding what you actually have is the first step toward genuine protection. The insurance industry thrives on confusion. Your clarity is your power. The woman in our story now carries gap insurance, rental reimbursement, and higher liability limits. Her premium increased by $180 per year. But if another accident happens, she will not face a $5,900 gap. She will not be stranded without a car. She will be made whole. You don't need full coverage. You need the right coverage for your car, your finances, and your life. And that starts with knowing exactly what the words on your policy actually mean: collision, comprehensive, gap, rental, medical, uninsured. These are the words that matter. Everything else is marketing.